quiet. There's a rumor going around, not starting by me, out on the Twitter sphere. Powell, gone. Out by the end of the day. Rumors. Interest rates at 1% by the end of the week. Rumors. We'll talk about that, the effects on the dollar, the effects on the stock market. Who knows, that buck week. Are you really up that much money this year if the buck's down 10%? We'll discuss that. We got earnings. We got big stakes being taken in companies. We got a potential takeout. Bank of America earnings. CF is joining us again at 8:35. Jam-packed Wednesday on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, let's go to the big board. Week close yesterday, filed through the downside, but you know what? The buy the dippers were down there. We're only down a couple points trying to get above unchanged. The buck flat, 98.27. Will that 10-day rally be an 11-day rally? TLT flat ahead of the PPI after a bad day yesterday. GLD in the green, silver a little bit more. GLD up 82 cents, 307.55. SLV 34.55, that's up 29 cents. And Bitcoin on again, off again with the bill being passed or not passed, whatever. It's up $2,500. The futures at 119,250. Triple D, I mean, for July, middle of the summer day, we got a ton to talk about.
Yeah, like all kinds of random headlines here happening along with the start of earnings season. So we have bank earnings with BAC, Goldman Sachs, Morgan Stanley all reporting. We have ASML warning on 2026 and the chips are getting hit. So we have lots of earnings news. But I want to start with a rumor that was flying around 10 o'clock last night. And it was really flying around the Twitter sphere. Being reported by independent journalist Brianna Morello that Fed Jerome Powell's firing is imminent. And then you had Congresswoman Anna Paulina Luna confirming this. Now, there's been nothing more. This was around 10 o'clock last night. There's been no other people reporting this at all. So this is just something that's just been being talked about on social media. Now, the major media probably not talking about this because this is an independent journalist that is trying to break this story. So they obviously don't want to give that attention for, but again, with the Congresswoman saying this is confirmed, it's a little bit concerning. Now, there's other people saying that he probably won't be fired because one, it's very difficult to fire. It can happen, but the process is very difficult. It's probably more that they would pressure him to resign, which obviously he's been pressuring him to resign the whole time with all the stuff that Trump keeps saying about him. I don't know if there's going to be anything that comes of this rumor. Again, this was 10 o'clock last night. We haven't heard anything more about it, but there is a Congresswoman saying that this could happen. So, or not could happen, this will happen. She's saying it's imminent. So whether that happens or not, we don't know. We're just reporting here. Just want to talk like repercussions from this, though, because you're thinking about it, and obviously nothing's been confirmed here. But what do you think the market's response, Joel? I want to ask you is, and Brentster could come in on this conversation too, because I think it's important. Hey, Brentster.
Good morning.
I think it's important we just kind of discuss this as a team. Like, let's just say, hypothetically speaking, that this rumor turns out to be true and Powell gets fired this weekend or something. What do the markets do? Because I saw this rumor last night. I was like, I don't know if that's good or bad for the S&P. Because here's my thoughts, and then you guys chime in too, is my initial thoughts are, well, the markets will probably like it because whoever comes in next is going to be a dub. There's no way Trump's going to let anybody come in that isn't going to lower interest rates on their first day on the job. So interest rate cutting will happen, almost immediately. I would think once they get a new Fed chair. But then you think like the control thing, like one, Trump's got so much power, he's finding a way to get rid of Powell, which is somewhat scary a little bit. But the main thing I'd be concerned about is the US dollar. because the US dollar has not had a good year whatsoever. So US interest rates are higher than most other places here. And normally the country with the higher interest rate usually has a stronger currency because people want to invest and have their money sitting in higher currency countries or higher interest rate countries. So this year, the US dollar is down more than 9%. This is in a high interest rate environment. If we have a Fed chair that comes in and starts cutting interest rates, from an economics perspective, that is supposed to hurt your currency. So I would imagine the US dollar probably starts to get weaker yet. So lost its shoe on, and then I'm trying to think, would it be good or bad if Powell gets fired? Because it's kind of scary. So I'm not sure the market would applaud it. What are your thoughts here? Start with you, Joel.
Well, first of all, Zena says, didn't the special counsel already say that he couldn't be fired? So I'm
but
not
then
sure.
They're saying there's ways around that. So
there are ways around it.
And Brentster, like we've
ahead,
seen
Brent.
articles in this. There's ways to make this happen. But imagine the pressure, Joel. So let's just say, I think hypothetically it could happen. Like I think not hypothetically, I think it could happen because just the pressure being put on them. Like behind the scenes, we don't know what kind of pressure, Trump administration is putting on him. He might just be like you were saying, Brent, like, this, I just don't need this crap. You guys are all over me. What do you want to do? Tank the economy, whatever, so he could resign too. That's a possibility. Anybody can resign. So that's a possibility as well if they put enough pressure on him. But I mean, we know Trump has been putting pressure on him nonstop since he got elected, calling him late to the party and calling him all the names, that he's calling him. And Powell's just ignored it because, he's just doing his job. So I think it could happen. I'm trying to anticipate what the market's response to it would be. And that's where I'm struggling because I think there's some good and there's some bad.
Mm-hmm.
And Chad,
Joel,
I think that inflation will go to 25%.
Oh,
to 25%. Maybe the real inflation, not the CPI. They would never let it go to 25%.
Yeah. Oh, yeah. You drop rates like that.
They would never calculate in any way for the CPI to go to 25%. So we know the real CPI is like 13 to 14. It's been calculated. They did it the same way that they calculated it back in 1980. We're running around 14%. It's been out there. You can go research it. We know that's the case. But Joel, realistically,
I'm not an economist. I'm not an economist.
They'll just cook the books.
I'm not an economist. From what I've learned observing the markets over the years, is that lowering interest rates is a tool to stimulate a lagging economy, right? Or in a time of crisis. The dollar's in crisis, the market isn't. I hate to see what would happen if they did that and then we went into a recession and then things didn't slow down. I mean, I don't see a need for it right now. I don't. And I don't think the market would take it well.
Interest rates right now. The stocks are at all-time highs. But that's not the question I'm asking. I'm asking what would be the hypothetical reaction to a firing? Because it's kind of scary that Trump has found a way behind the scenes to get rid of Powell. It's kind of scary. So Brent, I want to get your thoughts here too.
Yeah. You have your scales here. You have your uncertainty, and then you have lower interest rates.
Yes.
Which one is the market going to put more stock in? I think initially, right as it happens, I think the market would go higher on this because the market can't deny its prospect for growth from lower interest rates. I don't know how long that move higher would last when maybe some uncertainty starts setting in. The integrity of the Fed is perceived as a sacred thing. The Fed wants to remain independent. They want to focus on inflation and growth only. And when there's other factors that can put that into a fluster, then it's a concern. I will just say, the perception by Trump that Jay Powell is late to the game. I mean, historically, objectively, that could not be more false. The Fed is the leader. When the financial crisis was happening back in the day, and the Fed was doing these things, Europe was following like 30, 60 days later. Fed has historically been the leader. So you got to question, yes, I understand Europe is lowering rates right now and the US is not. Is that because Jay Powell is late to the game, or is it because they know more than a lot of the other central banks out there? I think that long term, I think the uncertainty would outweigh this move higher initially at the prospect of higher growth. But Dennis, I think you're hitting the nail on the head when you shift this conversation to the dollar. I think that's kind of your like most relevant thing to consider here.
I think it's important. I mean, you can see it through the UUP or whatever you want to show it through.
There's the dollar futures. There's the dollar futures.
Yeah, I mean, it's been, and if you look, this year has been really rough, and we're down about 9%, looking at it. And obviously it depends on the currency you look at it against, but when you look at it against the basket, the US dollar is not having a good year. I mean, in relative terms, so in absolute terms, the S&P is up about 5% this year. In relative terms, it's down 4%, meaning that in other currencies. So I'm Canadian, and I have a Canadian RSP that is full of US stocks because I know US stocks well. I like the US. I believe in the growth. I invest heavily in the US. I look at my performance in Canadian dollars in my long-term retirement account, not talking my trading account. My trading account's done very well this year. But even that, I've obviously, got a lot of US dollars in there too. That currency, when it translates over, on some of these stocks that I'm up in, I'm actually down in because the currency has done so crappy in the last, 3-4 months against the Canadian dollar. So we were 147, we're now at 137. So, I mean, you've quietly just lost 7-8% here. So world investors investing in the US are actually down this year for the most part, in their own currency. So that's, so then you think about this scenario where, man, the US dollar has been doing really crappy in a high interest rate environment. What happens if they actually start lowering rates to the US dollar? Does it get way worse? Because a high interest rate environment is supposed to have a strong currency, and it has not been the case. So that is concerning too. And that's another reason why maybe they should be thinking, a little bit before just flat out lowering rates. I mean, people say, oh, we like a weak dollar because it's going to help our export market. You can look at all those things too. But again, there's a certain tipping point where when the dollar gets too weak, then all of a sudden, it's not nearly as good either. So lots to consider, lots of balls to juggle. But, as a world investor, US has not been a good place to invest this year.
I think just putting like an overall perspective, because we don't know what's going to happen, right? We don't know if he's going to resign, get fired. We don't know who's coming in here. I just think you just have to look where we at in the market. We're in this environment, and this has been a Teflon market. It doesn't care about anything. It doesn't care about a war in Iran. It doesn't care about Russia, Ukraine. It doesn't care about tariffs. So why should it care who the Fed is? I mean, the momentum is the momentum. It's a momentum market. We're heading higher. If it comes to fruition, we'll see what the price action is. But right now, this market ignores absolutely everything and relentlessly moves higher. Now, yesterday, we could look under the hood, and it wasn't the greatest day. But what bothers this market? Is that even going to bother this market at all? We'll have to see what the reaction is.
And these rumors may not come, it's just rumors we're talking about, but they were from an independent journalist I think we mentioned the journalist, and then Congresswoman Anna Paulina Luna is confirming this. So maybe this rumor is coming from her. 800,000 followers on Twitter. So it's not nobody here. It's somebody. It's a congresswoman. So it is possible there's something here. It's also possible there's nothing here. Again, no major media is reporting it, but I think, it's important to talk about these rumors when they're being spread around on social media. And, just hypothetical repercussions to the market. It's an important conversation as well. So I know some people are frustrated because they just want to talk charts and they only want us to look at stock charts and that's it. But I mean, we need to, give context to it all, because I tell you, if Powell gets fired this weekend, your stock chart's not going to matter. There's going to be a serious reaction one way or another. We're trying to anticipate that reaction by having a conversation together so that we're ready if that happens. All trading is rant time and tangent time. All trading is being prepared for the headline, because the headlines make the charts. They make the charts. The charts are there, the technicals are there, but the headlines build it. just like we're going to go to the Goldman Sachs earnings. It's those fundamentals headlines that are building the Goldman Sachs charts here this morning. So it's important, if you can get ahead of the headlines and say, I'm anticipating this is going to be the reaction, then you'll be ready if that headline actually happens. If it doesn't happen, well, that's what it's all about. It's just doing your homework and being ready when the time happens. That's all I want to talk about.
At least we learned. Like in considering this scenario analysis, there's a heck of a lot of learning here. So I stand by you and us having this conversation, Dennis. This was a good conversation for sure.
So let's go to earnings. They need to see charts because there's half the chat that's just getting ticked off that we're talking something macro. Okay, moving on. Goldman Sachs, GS, did report earnings here this morning. Stock is getting a nice pop here, but starting to leak as these banks do. 1091 versus 940. It's a huge beat. The company just makes so much money. 14.58 billion versus 13.36 billion. So a nice beat on the top, a nice beat on the bottom. Revenue, banking and markets revenue up 24%, investment banking fees up 26%. Goldman is killing it everywhere. But, the stock reaction, it's a bank. Don't expect a bank to go up 5, 6, 10%. I know Citigroup had a huge move yesterday, but that was off of the stable coin news. You got to say something like stable coin to really ignite it. Because they don't just care about just making a lot of money. This market wants a story, not money. Goldman Sachs is starting to leak here, Joel. Give us some technicals.
Well, first of all, I'm a little disappointed in the chat this morning because I made a couple changes. I know my charts are boring and I'm not great at writing on them yet, but I made some changes. I consulted Triple D on them. He didn't like the VWAP. So if you people are going to think we're switching the VWAP, it's not going to happen. So, but yeah, a few subtle changes. I'm working on it, but the volume.
Tell them what you added.
I added volume on the daily because a lot of people have asked for it, and I think it's important. You could do the levels and the technicals, and stock may not trade very much, but I just want to point out, and the person I was talking to about this, look, when the biggest volume ever was in Goldman Sachs is when it made the bottom. People were just buying the dip, and Nvidia too. Look at the biggest volume.
Volume always flies high at the bottom. That's when you can tell, like when you get capitulation, because everybody's panicking and everybody's like, just sell, get me the hell out. I can't take it anymore. That's usually the signs of a bottom. And that's what we had in April. That's what we were talking about the STN room before even the thing happened, before the tariff thing got kicked down the road. We're just like, NVIDIA just fell from 140 to 90. I'm like, at a certain point in time, does NVIDIA care this much about tariffs? Yeah, bet. But I'm like, they really cut it in half. So there was an opportunity. And you're just looking for those capitulatory moves. And that's what we had. And that's why, I went long NVIDIA in the STN room, and I went long AMD, and I obviously sold them all too soon, although I still have some of the NVIDIA. But I bought Dell. Remember that day? I bought a whole pile of stocks.
I know.
And then the next day, you kick the tariff down the road, and I'm up like 20% on all these stocks in a day, and I sold a lot of them. Should have held because they're all up like 100% now. But, that hindsight capital is always 20/20.
CM says, Joel, don't you know you need to add at least 55 indicators to properly analyze a chart? Okay, the other thing, and then I'll get on to the Goldman numbers because there is a good Goldman number there. We tried a VWAP thing, and like Dennis's eyes almost popped out of his head. So we just got the 15-minute moving average on there. So if you use moving averages, this is the 50, this is the 15. Easy peasy in Goldman Sachs. You had
and the top one. What's the moving average there?
50.
50-day. That's the 50. Okay.
Yep. I could go 200, but
the 200 hardly moves. The 50.
I know.
And again, I'm not a big moving average fan, but I get that a lot of people like it, so we have to respect that. What people like.
I just want to, because it made suggestions. Great number. All you guys need to know about Goldman Sachs for the next 6 months is whether or not it could clear 714 and establish a bid there. Pre-market highs just above 714. Last 2 days, 714 splits the two highs. So that's a great number. You get above there, everything's great, going back to all-time highs. If I was a long-term investor in this thing and it lost 700, I'd get a little bit nervous. But that's Goldman Sachs and Morgan Stanley going the opposite direction.
Well, again, Goldman Sachs reports and potentially maybe sets the bar a little bit too high for Morgan because they reported about 10 minutes. They snuck it in about 10 minutes earlier. Morgan Stanley reported decent beat as well. They all beat $2.13 billion versus $2.13 versus $2.02 on the bottom line. Top line $16.79 billion versus $16.11 billion. But it wasn't as good of a beat as Goldman Sachs. So Goldman Sachs probably screwed him setting the bar earlier by 10 minutes. Morgan Stanley leaking here. These charts are the same. All these banks put together. They get a little bit of deviation for a day or two, and then they seem to just pull back in. Pairs trading, piston trading, whatever you want to call it, 101. They all move together, these big banks. A bank is a bank is a bank. At least for now.
Yeah. 1, 2, 3, 4, 5, 6, 7, 8, 9 days of consolidation between 140 and 145. So pick your poison and break under 140. Perhaps some downside. If you can finally bust out above 145, well, we'll go Kenny Glick on this and you look for 150. But tight consolidation after a nice move up. So you have to assume it's a consolidation to move higher.
And then the last one that just reported, and actually was earlier today, was Bank America BAC. And it is leaking here as well, because this is what the banks do. They report good earnings, they pop because the algo is too stupid to remember that, the pops are met with the usually subsequent drops, unless they mention stablecoin like Citigroup. And, so same thing. Bank America beat 89 cents. The revenue missed, actually. So they missed here. I never looked at this pre-market chart on this puppy. So it actually went down off the bat and then has popped. So the fade trade just works in the banks. We're going to correct the statement and just say fade the initial move because the algos are always wrong on the banks. Nothing's 100% of the time.
We kind of talked about this one on STN, and I wouldn't have bought the dip, and we talked about just kind of like selling the rip, and it was just based on kind of the price action in the banks yesterday. So I don't know, you did get into the 47 handle, came back down. I think for Bank of America, I'm just gonna. 47's huge. Now you're 35 cents away. If you get back to 47, you punch through it, you establish a 47 bid. You're going to go back, perhaps go back and test 48, but 46, 45.95, the low yesterday. So boom. And majority of the price action over the last 15 days has been between 46 and 47. So once again, consolidation, don't have to make a move. Maybe wait for it to break down to below 46 or above 47.
Okay, so your big move down of the day and probably putting some pressure on some of the chip names here, although NVIDIA never has pressure. ASML. It's down 66 points. It's a huge move. Reported last night, because obviously it's overseas ADR. They reported in the US dollar $6.69 versus $5.94. So it was a nice beat. 8.72 billion versus 8.55 billion. So it's a beat on the top and a beat on the bottom. And when we look here, gross margin was good. A lot of the numbers look good, but then they started talking about 2026 with uncertainty. And they don't like it when you hear about uncertainty here. And ASML is down substantially on that. Now, it doesn't help that the bar was really high. The stock was up 15 points ahead of it, yesterday. Is this a dip that they buy? I'm asking you, Elconin. What do you think?
I think. Well, did you see that where it went to, Dennis?
No, I did not.
It went to 835.10.
Okay, so it went up originally on the.
I would say, and there's no exact number here, but I think this really needs to hold 750. I'm just looking at it. You're trading right at 757.80 now. The pre-market low is right around 750. Like I said, there's no, what's this daily low here? It says 778. Wow, what a weird chart. I don't know. I just see the 800. I see the 750. I think we need to hold 750. Oh, actually, I stand corrected. It's below the support. I don't know. I like 750 for some reason. In 50-day. I don't like it. I'm not buying the dip in this one. It had a big run up. I'm horrible with $760 stocks.
It's hard. Sympathy moves, you are seeing Applied Materials down 5 points here, which again, Applied Material has been running and running and running to almost doubled since its April lows. Some of these moves have just been absolutely incredible. LRCX is another one that's trading down 2.5%. Again, same story. April low, $56. It's 101. I mean, it's up like 85 or 90%, just ballparking the math there since April. I mean, we got to give perspective here. I mean, these moves since April have just been like the easy money's been made, I feel like, on the bull side. I know everybody says, oh, the bull market's just started because we just got back to the highs, but holy crap, we're up 25% or something on the S&P in a matter of 3 months. I mean, that's year gains right there. So I just don't think it's going to be as easy as as it was. But that doesn't mean we can't go higher. It doesn't mean the bull market's over. I just don't think we're going to continue to fly up here. And we are seeing cracks form, and that's what we've been talking about. So ASML is another crack. NVIDIA and AMD, no cracks at all. They love the AI trade. They think these two stocks are your leaders here now, and they're going, I think that they are the leaders as well. Own them both. But cracks like in, CrowdStrike and the cybersecurity names we were talking about that, and other Momo names just starting to show a little bit of relative weakness just recently. Nothing too alarming, but just saying, hey, maybe we need to cool it for a bit. And then you're seeing some reports and you see ASML and you're like, okay, well, let's just go buy this because we know it's going to come back. Well, let's go and look at Okta. I want to look at this one for a second, which is a cybersecurity name, nothing, but it was a Momo name that reported and missed. So not necessarily the same here because this reported didn't and beat, but the guidance was a little bit light. So when you look at Okta chart from the gap down back in May, we gapped down from 125 to 110, and people are just like, oh, you just buy it because it's going to bounce back. Not so fast. When they start talking about guidance, sometimes the sellers continue. And we have seen Okta, which is a tech name, cybersecurity darling here, continue to lose another 20%. So it's not necessary that every single tech stock that dips gets bought right away. I like the dips that are getting bought because of a high bar, not because they're looking at 2026 and saying caution. That's where I think the difference is. So I think not all gap downs are the same. Why did they gap down? Did they gap down because, the bar was simply too high? Or did they gap down because they said something about guidance? Because if they said something about guidance, those might be the ones you want to lay off.
They just told you just got bad news from the company. The company through 2026. So do you think they're not? I mean, to me, the company giving you fundamental information, it could change. The environment can change. But you just got fundamental news that they're not sure about 2026. And we're not even, we're halfway through 2025. Hard for me to get excited about the stock. Okay, we got less than a minute here to preview the PPI year over year, 2.5, prior 2.6. Month over month, forecast 0.2, prior 0.1, year over year, forecast 2.5 versus 2.6, core, month over month, forecast 0.2, 0.1. We don't care about what the actual numbers are. We just care about the
reaction to the numbers, the expectations to the number. Brenster's going to break in with the actual numbers in about 20 seconds here, and we will see what happens. Remember to look at the IWM and your TLT. Those will be more price sensitive than SPY. Why? Because small caps need lower rates. SPY is full of tech stocks that doesn't necessarily need lower rates. So it makes a big difference here. So keep an eye on the TLT, keep an eye on the IWM for the real move on what stocks are going to, do off this. So let's go.
We go. Stocks moving higher initially, not seeing the data yet. There it is. We have a light reading. Core PPI for June, month over month, 0%, no change. We were expecting a 0.2% increase. Core PPI on a year over year basis, light at 2.6% versus a 2.7% growth estimate there in prices. Stocks initially liking this number. Remember that we did have our CPI reading yesterday, very similar to this PPI reading. CPI and PPI always come a day after each other. CPI always comes first, kind of lessens the value of the PPI because we get a little preview the day before with the consumer prices. They are still liking the number here, and I love that tip about the IWM there, Dennis. That's a great one.
Yeah, Yep.
And IWM is ripping on this. So if you look at S&P centric, you're probably looking like, it's moving up a little bit. IWM just ripped higher on this. So we just ripped up $1, so 0.5%.
I see
so
it. I see it. I
move.
do have
TLT also going higher.
Yep. 221, Dennis. I got the 221. It's pulled back $1 to 220. So the IWM reacted. The TLT, that reacted too. That they both spiked higher and potential fades early. We got to remember, people got caught yesterday a little bit. So very important to get back to that pre-market high. It's just called 221 for the IWM. Let's move over here on the IWM. Oh, wow. Yesterday's high. Wow. A long ways away, 224. So keep an eye on follow through the pre-market high, the IWM. As I said, the TLT, that got an initial spike too. What I've been looking for the TLT is to get above 86 and hold 86. That's halfway back of that move. Hasn't done much. S&Ps, we can go, did them last. S&Ps got a nice spike here to 62.9650. Not a ton in here. I think we're still consolidating. We're still within a range. And I'm going to go with the Brentster number here. And there's no exact number on my sheet, but 6,300. The battle for 6,300 continues. We got way above it yesterday. We came below it yesterday and overnight. But right now, the market is liking it. I didn't see my stocks light up a ton. I did now. NVIDIA, I'm looking on the 1 minute here. That's just kind of hanging out. Watch that closing price in NVIDIA today, folks.
And again, so I'm just
Yes.
going to say, it's not NVIDIA that cares about the PPI. NVIDIA story remains intact. It's the smaller interest rate sensitive names.
Okay.
NVIDIA is not an interest rate sensitive name. So automatically we want to look at like IWM is like the thing you're going to like the most. And it's popping back up here. So it's good. You're seeing the value trade, which got hammered yesterday. The value trade down substantially, popping back here today. You know why? Because most of those value names want lower interest rates. So when we see PPI unched, okay, well, there's more, to say that, hey, inflation is not here, at least from the PPI numbers and CPI numbers. So that means, maybe we should lower rates sooner than later. So, I mean, that's giving, a little bit of, and that's why the small caps. Think about XBI. XBI needs lower rates. All these small companies that are biotechs are financing their trials. With higher rates, those financing costs are higher. So interest rate sensitive stuff, IWM, XBI, all these value names. You can say stuff with dividends because, those dividends are more attractive if interest rates go down because it's not competitive with those dividends anymore. That's the stuff that is going to move off of a PPI and CPI number. It's not NVIDIA.
Okay, let's see. IWM, let's see if we can get back to the pre-market high. Just not much in there in the dailies because of the big range you had yesterday. I look at my if we can clear 221, the next daily close, that would be the close from Monday at 223.19. But so far so good in the IWM. And we got a guest in the background here. Back-to-back days with Christian Fromhertz, founder of Tribeca Trade Group. How you doing today, Christian?
Good morning. How's it going today? We get PPI data that pops the indices a little bit. So yesterday was horrible market breath yesterday, but just kind of shows you can't get too negative about the market right now. So how you guys doing today?
We're doing good. Just continued underneath demand. Like that's what I was saying even yesterday. I'm like, okay, you have a bad day, and we're talking about this in the STN room, but it's hard. The bulls are still in control here. Like, when you get these, 3, sell-offs and the breadth is bad. There was home builders down 4%. And there was a number of things that really got hit pretty hard yesterday. But so it's cracks. But I mean, when you give perspective here, Christian, I want to get your thoughts on this too. I mean, the S&Ps are up 25% in 3 months. The stocks, some of these stocks, tech stocks up 80, 90, 100% in 3 months. I mean, maybe it's just time to cool off a bit as opposed to starting the new bear market. I think, and dips continue to get bought because there's just a lot of people who missed the last rally. So I just don't see the underneath demand going away. What are your thoughts?
Well, a couple of things. I mean, there was a note out I was reading by Bloomberg that it's funny whenever I hear like the CTA models have to buy or sell, but they're saying that they're a buyer. So I think so. I find that interesting, and it's just right to your point that there's still funds and areas of the market that are not areas of the market, but different groups that are still doing some buying and that are still probably underweight. If you believe that, it's tough. It's tough to believe that after the rally that we've had, that some of these funds could still be underweight equities or still have to buy more. But that's what some folks are saying. We're right now and we're getting into the heart of earnings season. I think that's really going to be the key for the market to kind of either push higher or stall here. I think that's kind of why we've been trading in a range the last couple of weeks. If you look at SPY over the last, I'm going to share my charts.
Go.
If that's okay. Share screen window, and so going. There we go.
Oh, sorry, we're on the
Yeah.
double click. There you go.
This is just a 1 hour chart of SPY. Note that we did get to new highs yesterday, but that was a pretty big stall again. So to me, it just shows that the market isn't really ready. It's looking for some bad news at the highs. It's looking for some good news on the lows. And I think really we're kind of just in a bit of a waiting period until we get some of the big names that are going to report earnings. And this is the market, SPY, of course, is market cap weighted. But here's also if you don't believe me about trading in a range, today is the 16th. This is where we were on the 3rd, right? The day before the 4th of July when we had off. So we kind of hit that same level that we hit yesterday. So I think we're just going to continue to bounce around here until we get some of the bigger names that report earnings. That's my view most times, unless something crazy is going on. It usually during earnings season, we usually go back and forth. And I think if you look at the financials this morning, you got a cut, and yesterday too, you got a couple up a little bit, you got a couple down a little bit. So I think that's going to kind of play out until we get through some bigger names. The financials always kind of aren't great trading opportunities around earnings, but just to kind of look, I just want to show the Qs, and I just want to show IWM here really too. Qs have a little bit more of an upward bias. We did get to new highs yesterday, and again, right now we're sitting right back at that July 3rd high. So that's what I would be watching for the Qs, just to see if we can kind of push higher, like right around this 557 level. And I just wanted to show the other one too. IWM looks like it wanted to break down, had a bearish engulfing candle yesterday, but look at it pop back up a little bit. Some of that has to do with the dollar too. The dollar was super strong yesterday, so in terms of macro, just keeping an eye on what the dollar has been doing, because it has been a bit stronger. My view is that the market can handle gradual moves, but just don't want to see these sharp aggressive moves in the dollar. Retesting that 50-day moving average, that's not something that it hasn't been able to get above this 50-day moving average basically since it dropped below in February. So those are just a couple macro things or bigger market things that I'm looking at today.
Talking the earnings, and we're coming into Netflix is going to be the big one to report. Netflix and Taiwan Semiconductor report on Thursday, and then we're going to start getting into the mega caps, the following couple of weeks. Are you worried about the bar at all? Because me and you talk about the bar, and I mean, you got a stock like Taiwan Semiconductor that has doubled in the last 3 months. You have a stock like Netflix that is up, 30% in the last 3 months. But then you got other stocks, that obviously going to report as well, that have really moved higher. Are you worried that the bar might be a little bit too high for these companies, or is the bar not matter here, and just the bull story is going to take over, and if the earnings are good, they're going to go up? What are your thoughts on the bar going into these earnings reports?
Well, I think it's definitely higher than it was last earnings. This is where Netflix was trading back here. So yeah, I am a little bit worried about that, and I think my view going into earnings is to not put on too many bets, thinking looking to play moves, but just watching the price action after the earnings report. Also listening to what companies say about guidance. You had ASML, which is down decently. So again, I think you're going to kind of see this type of thing where you've got some companies are going to be executing well, and some other companies are going to be doing just okay and maybe bringing down their guidance. So I would rather kind of wait for the dust to settle a little bit for some of these companies, because to your point, I do think that some of these names have run a little bit too much and the expectations are too high. So again, it's going to depend on how well they're doing. I think that you've got some exciting things going on, and I think we've seen so many different areas rally decently. Semis and ASML is a part of that group, but semis are sitting here and made a new high and are showing relative strength in tech. You look at other parts of tech. We saw a little bit of a sell off in cyber names last week, software. But some of these areas that have really advanced, I think you're going to now have to see the proof of also once the companies speak and they give their earnings call, they're going to have to be as exciting as retail investors are, and that's going to be tough to match.
All right, Christian, you just mentioned cyber. Let's look at CyberArk, the technical setup there. Pull back from the highs, hanging out at the 50-day moving average. 3 quiet days here. Trading up 219 the pre-market. I mean, if you want to, do a low risk trade, well, it depends what your risk tolerance is. Looks like you got a little bottom here at 370, a nice pop up. What's your criteria for CyberArk?
Let me start with I'll get to CyberArk. Let me start with the whole ETF first. So this is the CIBR ETF.
Okay.
So I would rather have a little bit of this going into these earnings reports, like just a little bit of a pullback, right? We were just mentioned Netflix. Like again, Netflix hasn't dropped that much, but at least it did hit a high of around 1340. It's at 1260. So that bar comes down just a little bit, which I like. And I would rather have some names do this too. When you look at the whole cyber group, so again dipped, but finding some support. So if you like cyber for more than just a day or two, maybe going out for a couple weeks, couple months, like this is probably a dip that you want to buy. You mentioned CyberArk. Let me bring up that one.
Okay.
It's not one that I've traded in a while, but I would like to see which names start to kind of come. The majority of these have sold off a little bit. I would like to see which ones kind of come back a little bit. So this is below the 50-day moving average. I would like to, again, I look for relative strength. So I look for names that are holding up a little bit better. I actually like Cisco a little bit here too, but again, I'm not out there buying it today. I'm just basically watching. I think Cisco has quietly been on a good run. And I would watch a little bit of support, 6650. One other name to like CrowdStrike, of course, gets a lot of the attention. Like this has held the 50-day moving average. It has not broken it. So that's one that I'm watching too. And then Zscaler, which had good earnings too. I would like to see Zscaler get back above 295.43. But again, it's got that cushion of the 50-day moving average. Like you can even try buying the dip at the 50-day moving average and setting it below. So that's one group to kind of take be watching at this point, and because buying these dips in these things have worked pretty well.
Quantum. What's on your radar in quantum stocks?
We got some news on RGTI, and you look at this chart in RGTI, and it's been pretty methodical in terms of it hasn't blasted off like other areas of the market. It's just kind of hanging in there. So you got a catalyst this morning in it. They announced that I'll give you the exact news because I'm not an expert on quantum chips by any means, but they demonstrate multi-chip quantum computer has achieved its mid-year performance milestone of 99.5% median 2 qubits gates to monitor 36 qubits. What do you guys think about that? All the qubits in there? You think that's
yeah.
I don't know anything about that. I'm joking, but it sounds pretty good. Again, I watched the technicals here. What I would be watching for today is a move above 1368 to see if these things are really going to have decent momentum, because I know you've talked about that, Dennis, a lot about the momentum market. We saw rare earth stocks have a huge day
Crazy move yesterday.
We've seen the nuclear and the uranium stocks. So, I think you just kind of have to stick with what's hot for now. And you could even play these for day trades. I mean, MP Materials was up how much yesterday?
It's up again. It's up another 6%.
And
it just keeps going.
It just keeps running. So, if you could find these things for the day and say, because again, like if you're worried about the overall market and some of that momentum, you don't have to swing trade some of these things. You can day trade them. Yeah. And MP Materials is up here. I like this TMC. That's my favorite in the group right now. Again, it hasn't shown that huge momentum, but the chart is solid, and I'm looking for a move to 848 in TMC. But yeah, I mean, just if you go through some of these quantum names, they're holding in there. They've just been quiet, and I think that's kind of been the key right now to some of these areas of the market that are hot. Is you wait for them to kind of chill out a little bit, and then you can kind of buy, because you could see when they do that. Here's the last time we go back to April and May, QBTS moved higher, consolidated, and then all of a sudden get some good news and the stock moves higher, and you're kind of looking at that consolidation.
It's sitting around waiting for a headline, waiting for an analyst rating, waiting for a catalyst. And when you get that catalyst, you got to be fast, because they go. I mean, it's like Groundhog Day through all these, and I love how you just laid it all out. We went from rare earth is the new hot thing right now. That's today, but we keep cycling through these themes. This quantum theme has that potential. That one headline, could get the whole sector going here again. Is it the RGTI headline this morning? I don't know, but I mean, this is just the way this market is. It's just like. It's like this team of algorithmic momentum traders that just come in and bang, and they're going to take the whole sector going, because the rare earth one really, like the MP one, is a jaw dropper, because MP really didn't have a history of having moves like that. Like, we've seen some crazy moves in quantum stocks. We've seen some crazy moves in the nuclear stocks. We never saw really crazy moves in MP. It had some moves where it moved up like 5 or 7 or 10%. Never like doubling in 3 days. So this is new for this. So, yes, I mean, it's just like you got to go, if you're a momentum guy, you got to go and just find those setups. So I do like the way you're outlining that quantum. It's sleepy here right now. And does it have the potential to get hot again? Absolutely. What other sectors do you think? So we've got just outlined 3 different areas here. But is there something else that the market is sleeping on right now that could just ignite like this?
Well, that's why I kind of point back to the quantum names a little bit, because they're sleepy. That may take more time, and I don't think that they're going to get a catalyst other than you'll probably hear about some at some point you're going to hear about another hack that happened somewhere. And I think obviously drone names have been very strong. I think it's a little bit tough with this crypto week, but I like what Ethereum is doing, right? I mean, that's one that has been waking up a bit and showing some strength. So I think, some of the names in this group are doing pretty good. I see somebody talking about SBET, which is one of the few ways that you can play. It's like the equivalent of MSTR for Bitcoin. Well, this one does that for Ethereum. So this is a name to keep an eye on too. It's got some resistance here too, but so I think just staying nimble and just understanding that the overall market is trading in a range, but some of these things you can kind of hit for short-term trades. That's I think this SBET is trading up again this morning because it's going to go the way of Ethereum. So Ethereum goes up, and SBET's going up right now. So. Yeah, those are a couple of things that I'm watching.
Yeah. I just looked at the Ethereum chart, and I remember, I don't know if we were talking about it with you, but that had a long consolidation, and then it finally broke out. I did not keep my eye on that one. One final thing, Christian, here, a tactical question here. You talk, I know you trade all kinds of stocks and, all kinds of prices and stuff, but like when I'm pulling up some of these, I noticed that some of them are, maybe under $25, under $30. Is that just what the charts are giving you and that's what you're trading? Or do you feel that you can trade bigger size and control more of your risk with lower price stocks?
No, I feel like I could actually control my risk more with the higher price stocks. Like, I've been trading a lot, like Oracle has been a name that's been acting really well, but higher price stocks, it just depends it just depends what the themes are, and I gravitate towards that.
Okay.
I was just showing a chart of like ACHR, which is another one that's under $15, but again, you could kind of like you could look at the average true range, and that gives you a sense of like
Okay.
how much you may want to risk in these things. But I'm not really looking to, I don't size up these smaller cap names. In fact, I probably take smaller sizes because, in terms of, like notional trade, because they are very volatile. But no,
Okay.
I'll trade in the sandbox of both these. I don't really like to trade stocks that are under $5,
Yeah.
but anything really like above $10 is kind of game on for me.
Can we wrap it up with your technical thoughts on IWM? With bad day yesterday, coming back today, good inflation data. Uh, Perhaps interest rates going to 1% next week. Could you size up the IWM for us?
Yeah, I mean that's a really ugly candle yesterday. This has been a pretty tricky chart, a pretty tricky name at this not name, but area of the market. What I would be watching after that big red bar yesterday, I'll give you a short term level that I'm watching for
Okay.
today, and that's 220.30. And I think you just basically want to see right now Ethereum kind of get back into the range and not fall apart. Not IWM to get back into the range and not completely fall apart. So if it gets rejected at that 220.30, then I would be a bit concerned about what the small caps are doing, and I think also keeping an eye on what the dollar is doing, which I think is affecting small caps right now.
Christian Fromhertz, Tribeca Trade Group, sharing with his technical fundamental analysis of it. We love it, Christian. Thank you so much. And catch Christian 2 p.m. today on the Stock Trader Networks. Thanks, Christian.
Thanks, guys. See ya. Have a good day.
Thanks, CF. Joel, we've got lots of funny headlines from last night, like in just random headlines, but probably a better word for it last night. Like the funny headline being this, Powell might get fired, but GPN, Elliott takes a stake. And we've seen Elliott take stakes before, and the stocks tend to hold up well for a bit. But then, it gets forgotten that they're in there. I mean, they're in a lot of stocks. But GPN up 6% here this morning on the Elliott stake here. I just want to get quick technical thoughts here. Bring your charts back up. I'll bring them to the stage.
Yeah. I love doing the closing show with you because he's like, news on GPN. And then like we hit up a couple different, we wait, a couple seconds and boom, this thing got to 86.96. I'm just going to go historical precedents here. These moves initially have been some decent fading opportunities. And if you want, and it already was. So if you wanted, a lot of times, and I can remember doing this with Pinterest. I didn't say Pinterest. You might get a chance to get this back at 78 or 80 if you really want to, be in it. So I wouldn't be necessarily feeling like I'd have to rush out and sell today unless you have a target. But see if it can float back down. Who knows? A couple bad days in the market. If you're a big believer in Elliott, who is buying the dip in this thing after it came down from 220, more interested to see this thing come back to the 78 to 80 level to buy the dip as opposed to trying to sell the top.
I'm going to move away from the headlines. I just want to talk Tesla for a brief second here because there was another headline. Tesla registers plan for new 6-seater Model Y L in China. Tesla did lift a little bit on that headline here. It was down last night, and this is just a stock that will not stay down. It's like a coiled spring, and you push it down with bad news and it just pops right back up. And you push it down with some bad news, something that has been said, even the sales. I mean, there has probably been no stock that has been more resilient to bad news than Tesla, from like lowering sales, European sales, talking, the sales numbers over here, none of it good. Talking, with Musk forming his own political party, the stock loses 20 points and it's back in 3 days. I mean, this is the coiled spring stock. And I look at it, I want to be invested more in it. I want to be on it for a trade. And I bought the dip last night again, and I just flipped it out. I mean, it seems like this is the ultimate buy the dip stock here too. Does anything change? I mean, and the one thing to consider is what we were talking about, like headline anticipation, is like, think about the headlines that are coming here. Like, you know, from the expansion of robotaxi to other areas to, you know, obviously, you know, working, you know, further with humanoids. It seems like every time, and then you have, you know, a CEO that actively talks his stock up. I mean, there's so many, you know, potential headlines to drive this story higher, despite the deteriorating fundamentals of the core business. It's just why it's such a fascinating stock, and maybe one of the most fascinating stocks that I've ever seen in my 25-year trading career. But again, the coiled spring of Tesla was down $3 last night. Comes out with another headline here this morning, and now it's lifting again.
I would say in the 50-day, I know I don't I go daily highs and lows and stuff a lot, but I'm just, this 50-day to me is just, it's just a great level for right now. It comes in right at 328 or 321. You had the last couple days highs right in that area. So, I mean, once this is established, you know, of course, it's going to move a little bit each day. But, I mean, if this thing gets a sustained bid, and I mean, not just popping above it, but like a strong 320 bid, then you know, you got to look for this thing to, you know, perhaps rip back up to the junior high. So, kind of being a little bit tame. There was a bet. What was the headline out yesterday? Oh, Trump said that he's going to appoint somebody to regulate driverless cars that has the attitude of don't wait for an accident. That was the headline yesterday, and they knocked it down. So that is that's your Tesla. Your Tesla.
That was the news yesterday, yeah. And you know, and our regulatory hurdles are going to be here. Like when you just look at the flat out fundamentals of the company, they've deteriorated. Definitely. You know, it's trading over 100 times or 150 times earnings. It's like, seems insane, don't it? But then if you just stop and think as a trader, it's like, well, headline anticipation is a core strategy that I, you know, use in everything. I mean, unless you get an accident with robotaxi, but even if it gets an accident, it'll be an excuse. It'll be the other driver. Musk will come out and say, well, that wasn't our car's fault. It won't even be like, you know, so even let's just say hypothetically gets in a car accident, the robotaxi has a big accident and, you know, causes, you know, an injury or something like that. There'll be an excuse coming. Well, this wasn't the Tesla's fault. This was, you know, something else, you know, like the other car's fault. It'll totally be that way. Musk will come out with. So, I mean, he'll just talk it back up again. So it's nice to trade stocks from the long side that you know are probably going to snap back because the CEO doesn't like their stock going down. I mean, that's a good thing if you're like a trader. So ultimate buy the dip stock here, Tesla. Dip works again.
Yeah, even doing battles with the president, and you're still doing okay.
He's full on at war with him. He's talking about the Epstein files. He's trying to like basically get him like arrested.
But then he said he was sorry, Dennis.
But he's not sorry now. He's doing it again, Joel. Like he was on the weekend doing the same thing, talking like the Epstein files. Like, go look at his Twitter. It's fascinating to follow his Twitter account. And you know what else? Is the guy is humorous too. Brent, do you have it in the background, the tweet from like 3 days ago where he's showing the robotaxi? You want to see the actual robotaxi Austin? I don't know if everybody saw this. Maybe they did. But, you know, it's been going around social media. It's the real map. The real map of the robotaxi Austin, you know, where it is. And Brent's going to find it here in the background. But, you know, the one thing about Musk is he's actually funny, too. And I mean, this is all borderline ridiculous, but it is true. Like, I thought it was a joke at first when I saw the tweet, but no, this is the real area that robotaxi covers. So Brent's just digging quickly in the background. I'm trying to.
He says a lot of things. I'm scrolling a lot. He's always talking. I'm still scrolling, Dennis.
Just here, I'll see if I can find it too. But
3 days.
We'll both look at the same time because we got to show this map. It's fascinating here. So the chat will probably find it too.
I'm looking at. I got it. I'm looking at lots of anime. I was just saying. Yeah, I got it here. Let me share. I liked the one that had the comparison against Waymo. I couldn't find that real quick, but we'll show you what we got here. Okay. This one, I mean, this is the one. This is the one you're talking about, right?
Yeah, this is the coverage. This is the real coverage of where robotaxi goes. And obviously we can see what that looks like. And the funny thing is, this is Musk. And this is for real.
The middle finger? It looks like the middle finger, right?
I'm taking a ride on this right now on the robotaxi. And then Musk tweets back, Hope it has a happy ending. He says that back.
Yeah.
I mean, the guy's funny, man. It is funny.
It's not a middle finger, Brent.
It's not.
It's not a middle finger. Oh, I thought he was shooting.
Oh,
a
is
middle
it?
finger.
Oh, okay.
You could take it and interpret that way too. But
well,
and the rides cost $6.90. For real, the ride anywhere in that jurisdiction is $6.90. It's like he just has fun with the world, man. So I mean, I laugh out loud at the stuff he does, for sure. Like people hate Musk. I've always liked it. You know, I always say as a shareholder, I wish he'd be quiet and not get so political. But you know, I've been invested in a long time, and you know, the guy is funny. The guy is obviously his accomplishments are second to none. I don't know if he's going at war, if he's going to get like thrown out of the country who keeps this war up with Trump, but it may not matter anyways because the Tesla shareholders just buy the dip anyways.
Maybe what will happen first? Well, probably Powell getting fired. I would say Musk getting thrown out of the country or Powell getting fired. But wow, Brad put together one hell of an outline, and we didn't follow it.
Some of it. We covered some of it.
Whatever. It's not. It's a rough outline. Rough, not rigid. Rough.
We'll cover the rest of it in the STN room.
There you go. There you go. If you guys have, these great conversations like we did today, who cares about the outline? The outline is a guide. It's not a script. I'll just say.
Okay.
Anyways.
Right.
Where the conversation continues with 2 minutes overtime, giving you some bonus coverage here on pre-market prep. We'll be back with you tomorrow.
Appreciate you all.
Who's guest?
I'm sorry?
Who's guest tomorrow?
Ivan
Feinstein.
I found the bull. There may be nobody more bullish.
There's no one more bullish than Ivan.
He's more eternally bullish than Tom Lee. Ivan Feinstein. And he's been right. The stocks are at all-time high. So who's been more right than Ivan Feinstein? Buy those tech stocks on dips, folks. That's what works.
Okay. All right. See you guys a little bit over in the STN room. And then tomorrow, back early, 8 a.m., folks. Everyone have a great day. Thanks for joining.